Turkey's central bank today stuck to its pledge not to defend the lira with rises in interest rates. But as the CBRT fights off criticism from the IMF, Arjen van Dijkhuizen of ABN AMRO is on the phone with me now. Arjen, with inflation concerns already flagged up by the financial community, in your view, was today's lack of action the right move?
Well, Governor Besky already indicated in September that he would refrain from hiking rates further unless inflation expectations would worsen. His decision to keep rates on hold today was held by a number of factors. I believe first, inflation has come down somewhat in recent months from the 9% year-on-year reached in July. Second, capital flows have stabilized after sharp outflows in July. And third, the lira has strengthened further recently, held by expectations that the Federal Reserve will delay the unwinding of unconventional monetary stimulus into 2014.
The IMF have criticized Turkey's central bank for relying too much on its currency reserves, with claims that this policy leaves Turkey too open to further volatility. What defences does the central bank currently have against further downward pressures on the economy?
Well, the authorities indeed attach much value to exchange rate stability. It has to do with Turkey's main imbalances, which are high inflation and a high current account deficit. Too much depreciation of the currency would feed inflation, while too much appreciation would lead to even higher current account deficits. Of course, there are drawbacks attached to this focus on exchange rate stability. First, it means that there is less room for discretionary monetary policy, because too much rate hikes to attack inflation could lead to currency pressures. Second, certainly in times of stress, fighting currency pressures puts FX reserves under pressure and should be, in my view, accompanied by rate hikes. The central bank uses various policy rates as well as reserve requirements for banks to manage domestic liquidity conditions. The policy rate that is used most frequently is the overnight borrowing rate, the ceiling of its interest rate corridor. After cutting this ON policy rate by 500 basis points between mid-2012 and May 2013, the CBRT hiked this rate in July and August by a cumulative 75 basis points to defend the lira.
The central bank has employed a more unconventional form of FX policy, opting for a complex system of forex auctions and withholding one-week repos to support the lira, instead of opting to raise the policy rate. In your view, how effective is this method? And similarly, how does it impact the lira's purchasing power against the currencies of Turkey's main trading partners?
Well, at first sight, the policy toolkit of the CBRT is not always easy to understand compared to some other central banks. If you look at the signaling function of monetary policy, clear and transparent rules well understood by markets might be more effective than more complex mixes. However, all this should be seen against the specific characteristic of the Turkish economy, which has a large growth potential but also a very high need to import energy. This means that the CBRT is not only looking at inflation but also at variables like credit growth and the current account balance, and hence uses a whole variety of tools.
And lastly, the Turkish lira appreciated on Friday, buoyed by the possibility that the central bank would take action at today's meeting. But what is the long-term prospects of a currency appreciating on rumour when the fact remains that foreign investors are withdrawing from EMs as they reassess these markets, particularly given today's lack of movement?
We have seen capital flows to emerging markets, including Turkey, recovering quite impressively in recent weeks. It is true that emerging markets were hit by risk aversion in the summer stemming from tapering concerns. But after the Fed decided to delay tapering mid-September, and with recent fiscal issues in the US, market expectations have changed. The start of tapering is now not expected before March 2014, on average. On the back of all this, risk sentiment has clearly improved in recent weeks, with emerging markets profiting as well. This is also visible if you look at the Turkish risk premium or the Turkish lira. However, looking forward, we still expect some weakening of the lira in the course of 2014, assuming that tapering concerns will come back to the agenda next year.
Arjen, many thanks for your insight today. Coming up on Dukascopy TV, Elaine Stenson will be bringing you market response to that very delayed US data, and I'll be talking to Henrik Unell of Nordea Markets to discuss SEC pairs. Goodbye for now.